Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Wednesday, April 29th, 2026. Markets were relatively mixed today. Breadth was poor. Didn't see any fireworks with the Fed announcement or Chairman Powell. I did hear a lot of comments that some of the highest number of folks who are, what's the word I would use, um, counter to the prevailing um, opinion from the Fed. After hours, Google's up about 6.5%. Meta's the big loser, down 6.5%. And Amazon is down a little bit. Microsoft down a little bit more. So more volatility coming, folks, and we still got some big earnings to go, as we'll talk about. Jeffrey Scott's my name, marketmripro@gmail.com, website marketmripro.com. This is for educational purposes only. I do these videos to demonstrate how I use my tools for top-down trading and investing. I do a lot of webinars outside of these educational sessions, and I do a couple live meetings, which I'll mention in a few minutes. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisors. My Google group's called Top Down Trader. That's how I communicate with my followers. You control your entree and exit. You just go to Google Groups, all groups, join Top Down Trader, and let us know how you want to contact us. Why join? Because you'll get notification when I post things. You will be invited to private programs and sessions, and from time to time you may get discounts on some of my offerings. Know your news and earnings. So I already mentioned Microsoft down right now. Microsoft's down 2.5%. Amazon's down 3.09, over 6% on Meta down, and Alphabet's up 5%. Carvana also up big, up 7.67 or 30 points after hours. Tomorrow we got a lot of opportunities. We got jobless claims, employment index, GDP, and PCE complex. Frankly, of late, it doesn't seem like the economic news has been moving us much. People are focused on the impact of the price of oil, which many people says is the new VIX, and if that's the case, the VIX/oil was up a lot today. Tomorrow we got Apple, SanDisk, and I got a big position there. But my take so far is if you are making things that data centers need, you're having a great quarter. If you are somebody that is having to invest their CapEx into AI, you're losing. And you saw that with Metastock, you saw that with Meta, although Google, Alphabet seem to go the opposite way. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. And in case you don't realize that SanDisk and Western Digital, although I thought Western Digital already reported, certainly was up a lot today, are both companies that will sell a lot as data centers and AI expands. Phoenix meeting, June 5th through 7th, 2.5 days of education, software trading, and networking. Multiple speakers. Email me at marketmripro@gmail.com if you're interested. I'll put a link in below the video as well. $500 through May 15. I love these meetings. I have a couple of guests. I speak a lot. We go out to dinner Saturday night because a couple of people have informed me they might have to leave early and not make it to Sunday. I'm going to be in around 11 o'clock, 11:30 in the morning on Thursday, and I'll probably hold some kind of a pre-session especially for folks who are new to what I do. Love to have you join. There's nothing better than being in the room together. Oh, that almost rhymes. marketmripro@gmail.com is my email. Any questions you have. Coding at marketmripro.com is Praveen if you have any issues with installation. I did put out a special deal at I think it was $15.99 for the program at the last webinar, expiration April 30th for that. If you're a top-down member, you get another 100 off, so that makes it $14.99, and that will be the end tomorrow. Starting shortly, we'll be launching the new product. Now, you're not going to be hurt because you'll have an upgrade path that's even better than the initial price on the new product if you add the $14.95 and what the upgrade price will be. And what the new product is, it's a combination of my tools and basically the $3,500 package for TradeStation offered by John Person with a lot of new and exciting add-ons, new features. I've known John forever. I trade with John all the time. I used to have a desk in his office during my non-compete, non-solicit times in healthcare businesses, and I'm so excited to combine the two of us. On to the charts. So, VIX was up 2.44%. That's never good. But the Qs actually traded higher into the yen, up 0.61 right at the top of their day. Dollar was up 0.29. Spiders relatively flat in the upper part of their day. Diamonds down 0.56. In the middle, lower than the middle of the day, and the Russell down 0.67, and Bitcoin was down another 1.2%. If you look at breadth, there's a lot of issues. The numbers of stocks, 52-week highs minus lows, on the NYSE down to 36 and now turned negative on the NASDAQ is just one sign of poor breadth. But look at the participation. Only 28% of the stocks in the S&P 1500 were up. 27% in NASDAQ were up, and 26% of the NYSE were up. Now, I was somewhat surprised when I saw that because I was up, had a good day, but I have SanDisk and Micron and Bloom Energy, which reported yesterday and had a big gap up today. So data center good day for me. When data centers have a bad day, they've been the days that I've lagged the market. If we look at performance on the sectors, up 2.29 on energy, 0.8 on tech, and just a little bit 0.14 in finance. That's the only S&P 500 sectors that were up. The laggards, utilities, materials, and healthcare. If we look at themes, winning theme, oil exploration, of course, oil was up $107, $108. Autonomous vehicles, clean tech, semiconductors, battery tech, MLPs, cyber, Internet of Things, artificial intelligence, and somewhere data centers were up only 0.46%. All right, let's move on to the timing model. When the markets don't do much, it's a pretty good guess that the timing model didn't change, and there's no change. The bongos, which are the trend, are still in an uptrend, and the green line here says we're still in an uptrend and we're still in a buy signal on Spider, Qs, Diamonds, and Russell. That's on the daily. When we look at the weekly, you could see not big moves this week. In fact, kind of a, I don't know if it makes a doji, it's a little thick, but sort of a spinning top here on the Spiders. Also on the Qs with a little bit more of a bottoming tail. A negative week thus far on the Russell, and sort of a flag forming on the Diamonds. But all of them are still in a buy, still in a bongo or trending uptrend, and really nothing has broken down. We'll see what happens tomorrow. U.S. index ETFs. Again, the Spider looks like it's pausing to refresh here, which if you go back 8 days to last Sunday, a week ago, I said the markets need a pause to refresh. I'm okay with that because what happens is a lot of things get fixed. The 17-day is now above the 21E, which now we got to get the 50 above the 100, and the 200 is lagging. So we actually are healing the structure as well. So Spiders flat, a little bit of a pullback in play, healthy. Qs, good seasonality, a little bit of a pullback, nice move today up, excuse me, yeah, today was up 0.61. Again, is this topping? It could be, but typically I look at other signals to confirm topping. Yes, there's some distribution days. If I look at the Diamonds, sideways move, pulling back a little bit after a big move up, but we're just off old highs, We kind of filled this gap today and bounced. Again, it doesn't look that bad. And then the Russell pulled back a little bit, which was to this prior all-time high, and it held. So I see a market doing a relatively orderly and healthy pullback after a nice run, and I don't see anything real nefarious thus far. The breadth is bad, but setting up for a run maybe. Volatility was up today, tried to get up a lot more, and it came back down closer to where it opened, up 1.23 on the VIX futures. And then the US dollar futures here were up a bit, 0.36. This is the line, the 1.0, 100.00 line. And when it gets to that line, I'll be curious to see if it can break through. It's failed multiple times. If we look at commodities, gold continues to plummet. I mean, these were the lows back in March, and we're heading back down there after massive moves earlier. Hard to believe, isn't it? But we're below the 50 and the 100. Moving averages are rolling over, down another 1% today. Again, is that a doji? Sure. Indecision. Could it bounce from here? Sure, it could bounce from here. With my counting on it? No. How about silver? Same thing. Flat seasonality, down another 2%. Oil's the problem. Wow. Oil is crazy right now. Wow, that's all I can say. Seasonality is still strong. Big gap up today, up 7.9%. Um, I'm surprised I actually was positive today. I've got a big ERX position, but it was really the chips that saved me because almost everything else was down. Um, Big move on oil. Natural gas, no. In case you weren't paying attention, big move on oil. And what drove it was kind of what I alluded to the other day. Why not just leave our ships outside the Straits of Hormuz and let's blockade it just like the Iranians are? Our economy is going to do fine. We're exporting. I think you block those the ports, you block their ability to generate money from oil. How long before you have an upheaval in the population? Maybe that's Trump's strategy because today was blocking for longer. All right, 10-year, 30-year, big problems. 10-year up today, 1.47 at 4.42. 4.3 is where I start to get nervous. And the 30-year, another massive move up 1.07, closing right where I get nervous. And let's just draw a line there. Because it closed the same place, or that prior high. There's 5, and we closed at 5%. So I need to bring that down. That's an area that you don't want to be at. So that's concerning. That's going to hurt housing and a lot of other parts of the economy. That's concerning. Buckets. We're starting to build up below the Bollinger Band. So we've gone from a bullish to a little bit more bearish picture. That has to do, I think, with the poor breadth that we're seeing. But nothing is bearish enough to say anything's going to happen with it. Market breadth. Both the NYSE and the NASDAQ are coming down some. Obviously, the NASDAQ right now is much stronger. We are off dangerous areas on the high jump. We're now we exited the daily uptrend. We're now in a daily downtrend, weekly uptrend. So it's a pullback and an uptrend still. You could see stocks above the major moving averages have pulled back quite a bit. And you could see that we have a little bit of a positive new high, new low on the NYSE, negative on the NASDAQ, and the A-D lines and up-down volumes have broken. No signals down here today that I can see. And we're at 0.3 0.38 and 0.52. Those are neutral numbers. When it's less than 0.05, we know we're going to bounce. When it's at 0.95 or close, we know we're going to retrace. Right now, we're clearly neutral. When I look at a couple of other of the indexes, 0.38 on the spiders, 0.5 on the S&P 15, 0.57 on the Russell, 0.38 on the NASDAQ. So think of the beauty of what we're getting here. The markets have really not gone anywhere. They've not had a bad pullback. They're going sideways. We're close to all-time highs. Yet we worked off that overboughtness, which may give us some room to run once we get through the next week or two. All right, let's look at ratio charts. And no question, technology is still the leader here. And you can see energy's had some recent strength. I like looking at some of my favorite stocks and a couple of ETFs. Let's go to the key stock timing model. All right, let's just maximize. Amazon looks great here, but it's going to open around here tomorrow. So Amazon, a little bit of a sell-off. Look, they beat on revenue, they beat on earnings. You know, who knows where it'll end up, and we'll open tomorrow after we get through all the conference calls. Right now, down 3.5%, down to $254. So Amazon, some weakness. As long as it stays above this area here, I might be okay with it. And I'm long Amazon, but I do have puts on it, or a put spread. Apple, Apple has earnings tomorrow. Was down a little bit today. If it wasn't for earnings, I'd say it's still in an area you could look at it. I would not buy it before earnings. If I had it, just go look at Metastock, Metastock, Meta, and Microsoft, and Amazon, and ask, do you want to enter a new long position before earnings? Google is going to open up somewhere up here. This one looks really strong after hours. Last quote I saw was like 265 to 270. Let's see where it was. I don't want to guess. It's been a few moments since I looked at it. But Google was the one that they liked so far today. And 369, 370. So hold it up nicely. Amazon's now down 7.46, a little bit less than 3%. All right, so Google going to open up much higher tomorrow. I'm in Google, and we'll continue to be in Google. Meta is going to open up down a lot. Netflix, I covered my puts. We'll see where Netflix goes. Does it start to rally here? And then Tesla also has earnings tomorrow, so unless you've got a big cushion, you've been holding it a long time, I wouldn't be entering a position right here. Nvidia, you know, it's not doing much this week. It's still closing kind of where it opened the other day, still above where it closed on Friday, and it was down Nvidia 1.84. It's going to be interesting to see how it responds, but it's a supplier, not an acquirer, so one would expect it to have good numbers. But of course, the street will be looking for the future slowdown and what's going on with China. Microsoft, which here looks good, which we've talked about how it's worked its way up after last quarter's earning debacle. Right now is trading down 2.5%, so down about $8. So not horrible. Likely will hold the moving averages, which means maybe an entry opportunity. If we look at biotech holding at the 50, I won't buy it because it's holding at the 50. I need a white candle. I need to show something where it's bouncing, but I don't mind buying things after they sell off the 50, but I've got to see some positive momentum. I don't see any. The next one I think is software. Talk about no momentum. It's nowhere different in the last 5 trading days. Going nowhere, but the damage is probably already done. Data centers, well, after what we saw yesterday with Seagate earnings and Bloom Energy, there's still going to be a lot of activity in data centers. And as I pointed out yesterday, and for those that don't watch me every day, which is probably most of you, um, I built out this little list and I'm trying to figure out how to best incorporate it to review. But what this spreadsheet will do, it talks about which sectors have data center stocks, suppliers, and others, how many companies, their total market cap, and then industry groups, how many stocks per industry group, then all the stocks that are in the data center space, not the DTC or ETF, and then broken out by industry. And I think you learn a lot that we all know a lot of the things that are there, but specific real estate companies are involved. I think of Iron Mountain as the company that comes in and grinds up your paperwork so nobody can read your secrets. But there's a lot of different companies that are involved in data centers. All right. And then lastly, Shield, nothing. This is the defense ETF. And someday we're going to have to make up for a lot of ammunition and a few planes, tankers, and some of the spy planes that we have that got shot down. So we're now at 21 minutes. I've talked a lot about the market because right now I think that's what matters. If we go into my layout, the JES layout, John has his own layout. Let's just take a look. This is Bloom Energy, part of why it was up today. We talked about this one last night, and this is the one that I highlighted some of the crazy, wild earnings. So not a shocker at all that it had a great day today. This one I've been in and out of for a while as it's had a major run up. And those who know that I am a sucker for earnings, and I like to buy stocks that have big earnings. And this one has big earnings. And just to review for those that weren't here last night, it is Micron has big earnings growth. I'm long that. SanDisk has crazy earnings growth. I'm long that one, but it has a big multiple too. But look at the earnings growth. And then BE is the one that posted last night, and you could see BE had a great day, off a little bit after hours. And look at this earnings per share growth, triple digit for 1, 2, 3, 4 years. That is impressive. So let's go in the top-down view. What was moving today, energy and tech. I'm just going to look at those two. These are then the industry groups in those two. Let's rank them 1, 2, 3, 4, 5. So there you go. We got 10 there. That's 338 stocks. Let's come in here and let's do, got to be more than $5 and 500,000 shares. That brings me down to 231. Let's rank them by up dots. Let's just look at these real quickly. NXPI, I don't know what they do. I think they used to be semiconductors in cars. Probably do a lot of different things. And communications infrastructure, so it probably has a data center role. Big breakout, had earnings that came out after hours yesterday, so not a big surprise. In fact, let's see what happens when I do this. You could see here $3.18 in July, but it had $3.05 versus 264, so 15% growth with a surprise. Growth on revenue and a surprise. Has a multiple of only 22, and the market certainly liked it. EXTR, Extreme Networks, also on earnings. Now, interestingly, their earnings don't look that great, but the market certainly liked them, which meant they were thinking they'd be worse. SIMO, Silicon Motion, another stock, big move up on earnings. FVRR, a big move on earnings, but well below the 200, so not my cup of tea. I'm looking for something you can buy. DK, a refiner, it's going to have $2 versus a 56 cents loss. It's going to have 321 million versus 264 million. This is something that might run. It has a dividend of $1.02. Had a big move today. I'd rather bite on a pullback. UMC, another with earnings, semiconductor, Skyworks. Earnings are coming next week, but it's below the 200. Seagate was another one that had earnings yesterday. And you just look at those stocks. You look at BE, 1,366% earnings per share growth with a 255% surprise and 130% revenue growth with a 39% surprise. And then you just look at Micron that I don't believe is out yet, coming out in June, and you could see 682% growth. These are not dot-com stocks who had no earnings and were selling on multiple sales. And look at SanDisk. It's an IPO, or it was bought, taken private by acquired by Western Digital, I believe, who spun them out. I wonder if they wouldn't have liked that $14 of earnings themselves, but I'm sure they're big owners. Here's where I got in. Big breakout. Boom. Double momentum right here. You see the line. I had a little trade there. All I can say is wow. STM, earnings are already out. Nice move. But these things are extended. So the problem with sometimes when you look at such a narrow leadership where earnings are already out, things might be a little far along the way for us to buy. Look at Maxell. I call it Maxilinear, rather. 22 cents versus a loss. 540% growth in earnings, 43 on revenue, and a PE of 55. No, and that's now. Imagine what the PE was down here. So big moves. Hard to be getting into any of these right now. But anything post earnings, I start to put on a watch list and watch and look for my pullbacks. Now I like to buy bottoms up as well. If I go into the impulse view, let's clear the filters. Let's look at my double momentums. This is a pattern that for years I have noticed led to big moves. Mondelez, a boring group. Okay, it's food. Earnings came out, beat on revenue, had an earnings surprise, but negative growth. It's broken out among multiple trend lines. There's your double momentum. Good relative strength, good OBV. I don't pay attention to the high jump, and it's not going to be when it's coming right off of a consolidation area, and it's not elevated. It's going to have 71 cents versus 73, not exciting at all. Earnings this time were negative as well. Revenue is up. Not my kind of stock, but if you thought you had some kind of an edge with this thing, why not? Not my type. SSL, Sasol, I thought this was an energy play, and what does it do? Don't click on it, just hover. Integrated Chemical and Energy Company, 6 segments, mining, gas, fuels, chemicals. Bricks, electrical engine, hand non-ferrous window cleans, parts wash products, super soaps. Boy, they do a lot of different things. So they are related to energy. It's a ETF. You can tell that by the way it bounces around. But a big move up today, double momentum, not extended at all. That one looks interesting. Again, if I want to go out and buy right now, and then XWin Consumer cyclical, saw this yesterday, and I don't have much data on it because it's not one that's in our data set. Big breakout, obviously a lot nicer yesterday. The other thing I like to look at are the A minus, or the A stocks rather, not A minus, which are stocks that are more pullbacks and uptrend. CVR Energy, run back, pullback, breaking out here. Um, DXYZ, it's a ETF of the NASDAQ 100. Of course, it's going to look good here. Um, Lots of trend lines got taken out today. That one looks interesting to me. These will all be in a squeeze with either momentum or breakout. FSS, Federal Signal, nice breakout from trendline resistance. GFR, Greenfire Resources, what are they? Oil exploration, breaking out. GLNG, a liquid um, LNG provider, the shipper. Marine infrastructure for the liquefaction and regasification of LNG. This becomes key because of how less expensive gas is here than the rest of the world. If we can ship, there's a lot of opportunity. You're going to see in May, you're going to see 40 cents versus 30 cents. That's big growth in a stock that's been going down. 12.92 revenue versus 6, that's a double. That looks really interesting to me. It's pulled into a automatic trend line, breaking out here. I like that one. Calv was a takeout today. Mandalese we looked at. MEOH is specialty chemicals. Yeah, it's all right. OSW, One Spa World. I'm going fast because my wife is ready to feed me. You're going to have a dollar versus a loss of a dollar. You have a stock that's run up, and let's put a horizontal on this one. Let's put a horizontal right here. All right, let's try again and put horizontal right there. I think if I took out that high, I might want to be long par. Why? Earnings per share growth, revenue growth. It's refiners, it's energy, probably going higher after this consolidation. Not Pabst Blue Ribbon, which I grew up with, but Petrobras, big leader in E&P. The Sphere, whose fundamentals don't seem to match the stock price, which has just been in a beautiful run. Buy it on pullbacks. This was a nice opportunity here. Probably a little bit too far gone for me. SSL, we already talked about, looks good. TWO, Two Harbors, too much congestion there. XWIN, we looked at, better yesterday than today. And then YPF, another foreign energy, 77 cents versus a loss of 4 cents, 521 million versus 460. That looks interesting. No dividend, small PE. This is interesting as well. So again, it's energy and energy services, just like it was yesterday. And looked at a bunch of stocks, gave my comments. Will be interesting to see where Google, Amazon, Meta, and Microsoft end up. But I hope you end up in a good place tomorrow and continue to do well. Come see me in Phoenix at our live meeting. Links below, and thank you for watching. Hey, if you're new to my channel, just go hit the subscribe button, hit the alarm so you get notified. Even better, join my Google Groups Top Down Trader.